Thank you guys for joining us. We have It's Your Taxes, this financial wellness workshop today with Cami Sheaffer. She's at the MoneyCoach manager from the MoneyCoach program there on the Norman campus. So we really appreciate you, Cami, and really excited to see what you have to share with us today.
Thank you so much for having me. Welcome, everyone. It's the start of the new year. It's the start of tax season. It is here for 2022. So exciting to be able to share this information with you. I do need to start by just saying, guys, I am not a tax professional. I took accounting 1 and accounting 2, but I am not an accountant. So this is education only. This is information about taxes for tax advice. Specifically, a lot of tax advice revolves around tax deductions and tax credits, which we'll talk about today. You will need to go to an accountant. So I am just an educator. I am not a tax professional. That being said, I will try to educate you the best of my ability. We're going to be talking about several different things today. We're going to be talking about why we pay taxes very quickly, because I'm sure you're probably already aware where those services go, that money goes. How do we pay income taxes? Yeah, there's different types of taxes, but we are focusing on income taxes today. How do we know how much to pay, and how do we file income taxes? All right. So why do we pay taxes? You probably know it's to help pay for programs and services authorized by state and federal governments. It looks different, but for the federal taxes, it looks the same across the nation. These are just some of the areas that our money goes towards. But for state by state and local taxes, it does look different for each state. And we'll talk about state income taxes, but you probably, if you've been in Oklahoma for very long, you know that we are one of the states that you do pay state income taxes. There are 9 states that do not pay state income taxes, but we are one of them. So that's just some of the places that our money goes towards. And then we pay taxes in different ways. Again, we're going to be focusing on income tax today, but property tax, which in the state of Texas, they don't have state income taxes, but they have much higher property taxes than we do here in Oklahoma. But the government's going to collect their tax dollars in different ways. They're going to get their money. They need the money for programs and services. How they get their money may vary state by state. All right. How do we pay income taxes? Typically, taxes are withheld from our paycheck. If you were a permanent employee of OU, you filled out a W-4, and we're going to talk about the W-4 and all of that, but that is what they use to decide how much taxes are going to be taken out of your paycheck. More and more people are having side gigs or different kind of income in different ways, and are experiencing more of the contract employment or self-employment opportunities where they are earning income, but the taxes are not withheld from their paycheck. And we're going to dive into that as well. But typically taxes are withheld from our paycheck. I'm a permanent employee of MidFirst Bank. I filled out a W-4 when I became an employee, and they withhold taxes on my behalf. I still have to file taxes, and most of the time I still owe taxes, but they are withholding those from my paycheck. So when you're hired for a job, they offer you your gross pay, right? They tell you how much you're going to be paid before taxes are taken out. Once taxes are taken out, that is your net pay. That's what you actually bring home. Again, if you are a contract employee or you're considered self-employed, taxes are not withheld from your paycheck. You have to do that yourself. All right, and then federal taxes. We're going to talk about federal income taxes, and we're going to talk about state income taxes. So federal taxes that you pay income taxes go to the federal government, right? With your paycheck, money's going to be taken out for federal income taxes and state income taxes, and I'll show you an example of that. But I told you about this W-4. It's called the Employees Withholding Certificate. It's updated every single year. The 2023 W-4 is already out, so I'll show you an example of that. So it's completed by you when you first start a job, but it can be changed at any time. And that happened to me. One year, I owed a lot in state income taxes, so much that because I wasn't having enough withheld from my paycheck, I owed so much in state income taxes that I got a penalty. So I had to go in, change my W-4 to have extra money taken out of my paycheck just for state income taxes to avoid that penalty in the future. The W-4, it has information about your dependents, and it also has contains information about your tax withholding. So this is the example of the 2023 W-4. So this step 1, you fill out your personal information. Step 2, you include that if you have multiple jobs or if your spouse works. Step 3 is your dependent and other credit information. And then step 4 is any other adjustments, this is where I had to go in and add my extra withholdings for state income taxes. Okay. So if you find that you have too much being taken out or not enough being taken out of your paycheck, this is where you can make those adjustments. So why is this important? You don't want too little withheld and you don't want too much withheld. If you have too little withheld, you run into my situation in which you have a penalty, but also you may not have enough money to pay the tax bill when it comes. If you have too much withheld, then yes, you will receive a refund. And some people use that. They use that as a savings and then they get their refund and then they do what they want with it. But I kind of think of it as like this. I want to keep my money as long as possible so I can do what I want with my money. If my money is in my savings account, I'm earning interest off that, right? If the government is holding onto my money until it's time for me to get my tax refund, they're earning interest off my money. So a good rule of thumb is to not have too much or too little withheld from your paycheck, but it's really up to you and figuring out what's best for you. You can use a withholding estimator to figure out how much you really should be withheld from your paycheck. The government will put out tax brackets every single year. They update it every year. So right now it's 2023. We are in tax season for 2022. The federal government put out their federal income tax brackets. And if you make enough money to have to file taxes, you can look at this tax bracket to kind of get an estimate of how it works. But I want to kind of tell you a little bit about this because I'm not sure that everyone understands that our tax bracket or tax rates here in America is progressive. The more money you make, the more money you pay in taxes. But I don't want you to think that if I make $100,000 as a single individual, all $100,000 is going to be taxed at this 24% rate. The first $10,275 would be taxed at the 10%. All right. The next 30,000-ish would be taxed at the 12%. And the next 50,000-ish would be taxed at the 22%. And only about 10,000 would actually be taxed at the 24%. It is a progressive tax system. It goes all the way up to 37%. So clearly you can see the more money you make, the more you pay in taxes. Are there any questions about that before I move on? Okay. All right. In Oklahoma, we have state income taxes, like I mentioned. It is also progressive. The more money you make, the more you pay in taxes. It's actually, I didn't add the 0% for less than $6,350. Yes, this is going to be sent out to all the participants that attended today. These slides are, yeah. All right, so the more you make, the more you pay in taxes. But again, it is progressive, and you're not taxed at that entire amount. And it's a lot less than the federal income taxes. Okay, let me show you an example. If you've been working for very long, you probably are well aware of everything that is deducted from your paycheck. It'll show you how much you're paying in federal income taxes. My dad. It depends on how much money he's bringing in, I think. You could probably Google that, but I will say this. Most specific questions that you ask, guys, my best answer is talk to an accountant, talk to a tax professional. They'll be able to let you know for sure. But I always do a Google. The IRS website has lots of information, so they should be able to answer that. But as far as income, it's based on how much you have coming in. I don't have those rates for married couples who are filing separately in front of me, but it is on the IRS website. These brackets that I created, I got them from the IRS website and the Oklahoma government website. So that they have that on there. They also have a head of household bracket on the IRS website, so you can look at those numbers. All right, so federal income taxes, how much is being taken out for per period and total year to date. And then, so if you're looking at this and you're like, okay, I'm seeing that I'm not year to date, I'm behind on with my withholdings, I probably need to increase how much was being withheld. The only reason why I figured mine out is because it was tax season and I realized how much I owed and I was getting that penalty. I've never done an estimate and learned ahead of time, oh, I'm behind on withholdings. I just fill out my W-4 and then based on what happens during the tax season, I make adjustments from that. But if you're proactive, you can definitely do that. All right, state income taxes. So this is an example for California, how much is being withheld year to date. Some other things on there is FICA, which we're going to talk about on the next slide, and even insurance deductions, right? So if you're a fan of Friends, Rachel Green says, who's FICA and why is he taking all of my money, right? It's the amount required to be withheld by the government for retired or disabled workers. You do have to put into the system, you have to work a certain amount of years, 10 years. You have to look at that. I think it's not, they don't call it by years, they call it by like, it's been a while since I've looked at it, like maybe units or something like that. But you have to pay enough into it to be able to receive this benefit. I wanted to put on here the average benefit because I want you to see credits. That's what it is, Darla. Thank you very much. I want you to see that it's really not enough to live off of in retirement and that you should be participating in some kind of retirement plan to go along with your Social Security in retirement, and then also or invest, find some other way so that you have some other income. All right, another good resource for pension information on taxability would be the retirement organization that's managing the pension plan. Yes, absolutely. Good. Excellent. I love it when you guys help each other. All right, Medicare. Similar to Social Security, it's mandatory. You have to pay into it. Your employer is paying half of your self-employment tax. If you are self-employed, maybe you have this job at OU, but you have some kind of side gig where you bake goods and you sell cakes and cookies and cupcakes. That income that you are going to have to report, you are paying the entire amount of that self-employment tax. Whereas if you're employed, like I'm employed with MidFirst Bank, they're paying half of my self-employment tax. But these are going towards Social Security and Medicare. And Medicare is to help fund the medical benefits when you are in retirement or disabled. All right. How do you know how much to pay in taxes? Well, I always say, talk to the tax professionals. They're there to help you. If you do not feel confident in doing your own taxes. When I first started doing taxes, I actually hired a tax professional, a CPA, to help me to see if there was anything I was missing. And the outcome was the same as when I had done my taxes the previous year. So I feel confident doing mine, but I have a pretty simple situation. If I had a more complicated situation, maybe real estate or an LLC, then I probably would get a tax professional involved. But you can hire them. I would say a CPA starting off is probably about $150. And the more complicated your situation is, the higher the fee is going to be. But if you make less than, I believe, $50,000, you can utilize a free service. I have a slide on that. I'll talk about that when we get there. There is a way for you to get your taxes filed for free if you're under a certain threshold of income. So we'll talk about that in a minute. Why work with tax professionals? They can complete your taxes on your behalf and then file your income taxes. Does everyone know when the tax deadline is? Drop it in the chat. Yes, April what? Oh, 15th, that's right. Even if you're filing extension, you need to file the extension by April 15th. But they can provide tax advice to you. A lot of, again, tax advice centers around tax deductions and tax credits, especially if you're in self-employed or, yeah. So I would definitely work with a tax professional. How do we pay income taxes? This year it is the 18th. That's right. All right. So, but I always say April 15th in case it's not different that year. But yes, this year it is actually the 18th this year. All right. If you're hired to complete a job, we kind of talked about this already, like a permanent position. You are a permanent employee of OU. You're going to fill out that W-4. They're going to withhold the taxes on your behalf. They're going to send you a W-2 to show you how much income you paid, or income and payroll taxes that you had withheld, so that you can use that to file your taxes. If you are a contract employee or self-employed, that company does not withhold the taxes on your behalf. You will instead get what they call a 1099 to show your income earned. And I'm going to give you an example of that. So let's talk about the W-2s first. This is the official document showing how much you earned, how much you paid in taxes or had withheld in taxes. You will have for one for each employer that you had. If you were on unemployment, you'll get something from the state to show you how much income you earned from that. These documents have to be sent out to you by law by January 31st. Your online portal probably already has it or will have it by January 31st for you to file taxes. Here's an example of a W-2 showing your information, your employer's information, how much you've earned, how much was taken out in federal income taxes, and then also that FICA we were talking about. And then if you are, how much you pay in state income taxes, if you're contributing to a retirement plan, or maybe some other tax deductions that are at your disposal through your employer, those would be listed there. Health insurance, retirement. Oh, good. So some of you have already received yours. I haven't received mine in the mail from my employer yet, but I haven't checked my online portal. I just don't even try before January. I start doing it in February. Okay. The 1099 used to report miscellaneous income, independent contractors, self-employed. It also has to be sent out by January 31st. And again, the taxes are not reflected because they are not typically withheld, right? So it has, again, your information, that organization's information. So like, let's say you were working for DoorDash. It has your information, DoorDash's information, how much you earned, and then it'll show that no federal income taxes are withheld, no state income taxes were withheld because it is contract employment. Some examples of jobs that require a 1099 versus a W-2: ride sharing services, food delivers, photography or videography, fitness coach, drop shipping. This stuff is becoming more and more popular. Freelance work, consultant work, survey takers, online teachers, many different opportunities. If this is something that you are wanting to earn some extra income to maybe, I don't know, tackle some debt or reach some financial goals for yourself, this is opportunity for you. But you need to understand 1099s because there's tax deductions at your disposal with a 1099 as a 1099 employee versus my W-2. All right, so if you are 1099 employees, one of the things I would say is keep track of your mileage, because the miles that you put on your car to and from these jobs could be a tax deduction. And I'm saying, like, keep track of where you went, how many miles you drove, where you were going, and what that purpose was. There is an app, I'm going to write it in the chat right now, called the Everlance app. It's a free app, and it's an app to be able to keep track of mileage and expenses if you are in that position where you're going to be keeping track of these expenses to possibly be tax deductions if you're a 1099 employee. The other thing you can do is set it up where you're paying taxes quarterly, since taxes are not being withheld from your paycheck. This way you don't all of a sudden have this huge tax bill at the end, and you are staying on top of that tax bill throughout the year. And again, utilize tax deductions. You're going to be keeping receipts of expenses that you incur for those jobs. Peer-to-peer platforms. A lot of people have been talking about that. That was actually supposed to start this year. They're postponing it, but it's if you receive money through these peer-to-peer platforms like Venmo, PayPal, Cash App, Zelle. Okay, first, if you have a side gig, maybe like you are a DJ and you have income coming in that way, you are self-employed, right? But the people that hire you are going to pay you through Venmo. That's the way they're going to pay you. You would have them send it through goods and services. And yes, you will get a 1099 and have to pay taxes on that starting in 2023. However, if you and a friend are going out to dinner and y'all split the bill and they're going to Venmo you the money for half of the bill, they're going to send that through friends. That is not taxable. Okay. So I've heard a lot of people freaking out about these peer-to-peer platforms and 1099s. If they're sending it to you through friends, you're not going to get a 1099. You're not going to have to pay taxes on that. Okay, Jacob, that's a great question. This only applies for work where driving is required as part of the job, correct? Okay, so I was referring to jobs where you are not a permanent employee. You're a contract employee or you're self-employed. So like if you are a DJ and you're driving to and from your gig, or if you are DoorDash. But for me, I am a permanent employee of MidFirst Bank. I do not get paid for mileage to and from work. However, I have a certain area where I work. If I have to drive to something outside of that, I am allowed to turn in that miles and get reimbursed for that. So you have to check with your employer if that is something for you. But no, to and from my office here in Couch Tower on the second floor, I am not getting reimbursed for those miles. I hope that makes sense. Yes, cash transfers are only taxable if they are payments for goods and services. Yes. How do we know that they are sending money as friends versus or business? I don't know, actually.
I can't actually answer that one because it
Okay, go,
happened to
Lindsay.
me. Venmo will let you know. So if someone sends you a payment and marks it as like goods or services, Venmo will let you know that, a portion of it was taken because it was marked as a good or service. My sister-in-law accidentally did that with the payment she sent me for part of like, we were all going in on paying for a gift. And instead of sending it as a friend, she sent it to me as a good or service. So I didn't get all of the money. So yeah, the
Could you,
Venmo will let you know.
but then couldn't you have declined it?
I'll have to go back and look because it didn't show me that option when I did it. It just let me know that part of it got taken because it was marked as a good or service.
Right. I paid my son's booster club through PayPal, and they had told everyone after this, we would rather you pay by check because if you pay by PayPal, it's going to charge a fee. So they declined it, and then I wrote a check. So I know PayPal can. I don't know about Venmo. Yeah, Stephanie says it takes a fee if it's goods. And I don't use Cash App anymore. And I only use Zelle with family. So I don't know. You could probably, again, Google this information if these are peer-to-peer platforms that you use a lot. There may be some that are better than others when it comes to this kind of information and fees. Keep receipts for your proof. For example, when I first started doing this, when people would send me money for like reimbursement of like sharing a hotel, dinner, whatever, I was keeping those receipts because I was afraid I was going to get a 1099. I don't think that's going to be the problem now, but like if you are a business, again, you need to be keeping receipts of everything. Venmo does allow you to add comments to the transaction to help navigate what the money is being received for. Yes, you can refund them. Is there any minimum value we can receive before we are taxed, or is any income reported? They may send you a 1099 for any amount that you receive through goods and services, but it's $600 or more that you have to file taxes on it. So if you only earn $500 from Venmo or whatever one you're using, you do not have to file taxes on that. It's $600 for 1099s. All right. So yeah, they're going to send you what they call a 1099K, but now beginning 2023 set tax season, not 2022. And there may be some changes that happen between now and 2023 tax season. Your tax professional can help determine your filing status. If you're like, okay, maybe you are going through a separation or a divorce and you're trying to figure out how to navigate that process. You'll take all your W-2s and 1099s to your accountant and any other financial documents. I keep a folder at my desk at home throughout the year, and any information that I need, that I'm going to need, I put it in there. So yeah, at the end of the year, when I get all the bank statements, our investment information, our W-2s, all that goes in there. But if I was self-employed and I was keeping track of miles or receipts, I would put that in there. When I pay my car taxes, I put that information in there. If you're keeping track of maybe some health expenses that you're going to be using as a tax deduction, you would put that in there. We'll talk more about that. So I keep a folder throughout the year, and then when it's time to file taxes, I just pull my little folder and I'm ready to go. File federal and state income taxes by the deadline. Here in the state of Oklahoma, our income tax deadline is the same as the federal taxes. But check the IRS website and also the government's website just to make sure. Okay, so I recently received a tax form for the interest I earned from a savings account. What should I do? So that's something that you would report when you're filing your taxes. It may not matter. Yeah, you have to put it in your, if you're going to an accountant, a tax professional, you would take that. That would be something that you would take. And we'll talk about other forms that you would take. But yeah, if a bank or a financial institution is sending you this information, you are to report it and send or take it when you're filing your own taxes, or take it to the accountant as part of that. All right. Great questions. So when to file? April 15th, or this year, April 18th. How do I file income taxes? Okay. First of all, you have to figure out which tax return you should fill out. You know, students, they use that 1040 EZ. Most of us will use the US individual tax return or the 1040. That's the most common tax return that people will complete. It reports your gross income for the year, determines how much of that income is taxable after tax credits and tax deductions, and then it calculates the amount of tax either you owe or the refund that you will receive. Back when I first started completing taxes, some of you are probably going to be in this boat with me. The 1040 was a booklet, and you filled out the booklet, and the tax brackets that I showed you earlier were on the back of it, or in the inside of it towards the back. And then we had to tear that paper out and mail it in with our W-2s. Everything could be electronic now, which is so much easier. All right, what is a tax deduction? A tax deduction is a deduction that lowers a person's or organization's tax liability by lowering their taxable income. It lowers your tax bill, guys. Tax deductions are good because it lowers your tax bill. A standard deduction is a specific dollar amount that reduces the amount of income on which you are taxed. Okay, so many people take the standard deduction instead of itemizing deductions, which we're going to talk about in the next slide. So if you're single or separated, the standard deduction for 2022 is $12,950. If you're married, filing jointly, it's $25,100. I didn't see the head of household listed there. It may be this, I don't know what it is. So in other words, if you did the itemized deductions, which we're going to talk about in the next slide, and it doesn't add up to, let's say you're single, and it doesn't add up to $12,950, then you would take the standard deduction because that's a higher deduction, right? You would want to take the higher deduction to lower your tax bill the most. Let's talk about itemized deductions. The amounts you've paid for. So things like state and local income and sales taxes, your real estate taxes, your personal property taxes, your mortgage interest, disaster losses. If you itemize all your deductions, and we'll talk about other tax deductions, and it does not add up to the standard deduction, you'll take the standard deduction. If the itemized deductions is higher, you will do the itemized deduction when you're filing taxes. Really, your tax professional will do it that way. That's why you have to have like all your information in one place, because this kind of stuff, you'll want to take it to your accountant to show how much you paid in interest and how much you paid in taxes. All right, so here's an example of a student loan interest tax deduction. Let's call her Sheila. Sheila earns $4,000 at her part-time job. She paid $1,000 in student loan interest. Because paying student loan interest can be a tax deduction, her taxable income is lowered to $3,000. So this is an example of a form that you might receive if you're paying student loan interest. It's called the 1098E. It shows how much you paid in interest. You do have to pay at least $600 in interest to get one of these. And then it's up to $2,500 tax deductible. Here's some examples of tax deductions: charitable donations, medical expenses, but the medical expenses has to be quite a lot for you to be able to claim it. A lot. Yeah, it's not just your, $2,000 tax, not tax deduction, your deductible is the word I'm looking for. Mortgage interest, we already talked about that. State and local taxes, both property and car tax. Health savings account contributions, IRA and 401k contributions, self-employment expenses. You will utilize that a lot if you were self-employed. Educator expenses, which is not very much. Back when I was a teacher, it was like $250 maximum, which I never got. Because if you're self-employed, you can write off, a lunch. But as an educator, if you're self-employed, you have a lot of tax deductions at your disposal. But as an educator, which we all know educators spend so much on their classrooms, they are limited to $250. Gambling loss is a tax deduction. All right, let's talk about, and there are many out there. Your accountant can help you learn about tax deductions, and you can even research these on the IRS website. Tax credit, it's a dollar for dollar reduction of the income tax you owe. For example, if you owe $1,000 in federal taxes, but you're eligible for a $1,000 tax credit, your net liability drops to zero. So this is Bob. Bob earned $38,000 at his full-time job. He owes $4,361 in taxes. He has one dependent. So he gets the child tax credit, and it reduces his taxes to $2,361. One of the forms that you may get is the 1095. If your employer is paying your insurance and part of your insurance and the other part is being withheld from your paycheck, you'll get this. And I put the 1095 with all my tax information, but it's not something that has to be filed. But if you pay for your own health insurance outside of an employer, you'll get a 1095 that you will utilize as part of your filing taxes as a tax credit. A 1098-T is a tuition statement. It's an education credit. So that may be something that you may be getting if you have a child in school or you yourself are in school. Other examples of tax credits. They did lower the child tax credit back to what it was in previous years for this 2022 year. They raised it in 2021. It went back down in 2022. Here's some other ones. Oh, that's great information, Carrie. Okay, I'm going to talk about the CPA versus software taxes in a minute. That's good. That's great, Carrie. Thank you so much for sharing that. All right, let's talk about state income taxes very quickly. It is a separate form than the federal tax form. So if you're filling out the 1040 for the federal tax form, that is separate than state, but it's the same documents are typically used, right? Same W-2, typically the same 1099, same information. Something I just want to throw out there. The 529 college savings account is a tax deduction. It can reduce your taxable income up to $10,000 a year for single individuals and $20,000 a year if you're filing jointly. I used to have to pay state income taxes every single year until I opened up my kids' college savings accounts. FYI. So I wanted you to know that. But the 529 college savings account that I have is through the state of Oklahoma to get that state income tax bracket, and all the growth is tax-free, both federal and state income tax-free for the 529s. All right, where to file? Jacob, I'm going to look at your question here in a second. There are many different resources you can use to file taxes. You can use those softwares. You can hire an accountant. Again, if you have a complicated situation where you have lots of tax deductions at your disposal, you maybe have an LLC, real estate, something like that, or maybe use an accountant. If you have a very simple situation, like you are a single individual and you have one W-2 and no other kind of income, those softwares are easy to use. I use the software. I use H&R Block every year. But again, that one year I used an accountant, he charged me $150 and it was the same as what I had experienced doing it myself. Now, this is what I really want you to know about. The VITA program, the Volunteer Income Tax Assistance Program, offers free tax help, but it's under certain circumstances. There's an income threshold, and I think it's $50,000. I thought I had it on here, but clearly I don't. So go to that website and look at if you qualify for this free assistance to file your taxes. Here's some other resources for you. IRS website, the Oklahoma government website, the United Way website, the OU MoneyCoach website. Okay, I am going to open it up to questions, but I'm going to read Jacob's questions very quickly. All right, do dependents include any individual in your primary financial care, or is the role limited in definition? For example, if I'm taking a care providing primary financial support for a disabled partner. Okay. Jacob, I would talk to a tax professional about that, or I don't actually know the answer to that, because I know dependents are typically, by law who you married and the children, or if you become a legal guardian, that they can become are you a legal guardian of that disabled partner? Probably not. No, probably not. I don't know, Jacob, to be honest. I would have to do some research on that. All right, still the question about the interest tax. Is there something like if the interest is less than a certain amount, 600, there is no need to worry about? Are you talking about student loan interest? Yeah, there are definitions to define dependents. Yeah, I'd have to look. Again, I am not a tax professional, so I don't know all the ends of that. Oh, a savings account. Okay. Okay. Yeah, okay, yes. All right. So from what I remember, and I would have to look this up, I go ahead and put it in, but if it's under a certain amount, I don't think, but I think you still need to put it in. And also, like my children's interest, if they earn off their accounts under their social security number, I don't have to put that in. Guys, this is my email address. If you have specific questions, I'd be happy to go to the IRS website to find out the answer and send it to you, because it does two things. One, gets you the answer. Two, it educates me. All right, Roseanne, can you say more about the 529 plan? Is that based on contributions to the plan? Yes. Yes. So what you contribute could be state tax deductible. And then all the growth is both state and federal tax free, as long as you use it for the qualifying education expenses. Not really, Crystal. I really can't. 22 is my 5th year in the US. I'm an international student. I just got married, and can I file tax jointly with my husband? Yeah, I'd have to. Yeah, you guys have great questions, and I'm still learning. I am not an accountant, so I don't have all this information memorized. I literally, when people ask me questions, I go to the IRS website and read for myself. And then I have a friend who's an accountant, so I usually call them to clarify. Okay, Allison's able to answer that. again, feel free to email me. I am happy to answer, try to find out on the IRS website, but truthfully, you need to be talking to an accountant because they are the experts. All right. Karina says it depends on when you were married. Any other questions? I'll probably just discourage you because we were like, she doesn't know the answer to my question. So
Well, there are some links to some resources that I'll make sure and include in the follow-up email that might be helpful for some of these questions that are coming up, or some questions that might come up after today. So, really appreciate, Cami, that you're willing to share your email and encourage people to reach out to you as well. But again, we'll all include links to some resources that might be helpful. And yes, as always, many times it's really great to just, check with a tax professional, an accountant, a CPA. Some may be really nice that if you just have a quick question, they'll do it free of charge and no big deal. But I think it is very helpful to ask some of those professionals, you bet.
well, thank you for having me.
Thank you so much, Cami. Everybody have a wonderful day and hope you can join us in our next workshop.